Hello, Sean Iddings here. Welcome to another edition of the Microcap Club Member Spotlight. In these interviews, we'll showcase many of the talented members of Microcap Club. Today, we have Tom Bachrach, Principal of PFH Capital. Tom, thanks for joining.
Thanks for having me, Sean.
Tell us a little bit more about your background and how you've gotten to where you are today.
Yeah, so Tom Bachrach, PFH Capital. I'm principal of this. We're a small investment partnership based out of the Philadelphia area. So I didn't take the traditional kind of Wall Street route as an investor. After college, spent half a decade overseas in Egypt. Was working under the CFO of what was then the largest publicly traded company over there, and kind of I learned accounting on the job. I studied economics. They kind of threw me in accounting, figured it was the same thing, and through that process, I got an appreciation of kind of how the sausage is made inside a public company, as well as kind of the unique opportunities, challenges that you face in an emerging market. And that's been convenient because I find a lot of the most interesting opportunities in those markets today. So I returned home from Egypt. My wife and I were ready to have our first kid. Around then, I started investing in public markets, somewhat naively at first, and I kind of ended up surprisingly kind of developing a major passion for it. I followed the standard kind of mistake-filled learning curve. And eventually, after I kind of felt I'd done my 10,000 hours, I rolled some kind of friends and family capital in the fund and kind of, went pro. I love what I do. Never plan to retire. They're pretty much got to take me out of this office toes up. So, happy to do what I'm doing.
So can you tell us a little bit about what it was like to work in a different country? I mean, Egypt, that's going to be a bit different than, working here in the States in any kind of company.
Well, with, I ended up over there because I loved traveling. I didn't really care what I did. I was whoever paid me to go somewhere kind of different. I ended up over there in part because I studied Arabic. So I was able to kind of maybe pitch myself a bit more towards a Middle Eastern company. The biggest difference is that, as a recent college grad, at least at the time, I think this is going to slowly change, but back then it's like if you were an American, you came out with a certain amount of credibility, which was completely unwarranted. And it was like a 22, 23-year-old, you were kind of throwing a lot of responsibility. They were like, oh, he's an American, he must know what he's talking about, which was kind of probably silly, but it was actually amazing. It was amazing work experience because they just threw a lot at you early on. Other than that, it's just, people are kind of the same all over the world, culturally some differences and stuff like that. But weather was great. People were nice. I just loved it. And it's, it's given me the confidence as I've gone on in my investor career to kind of not be kind of shy about going into, unusual markets. So I'm very thankful for the time I spent out there.
Right. Very good. And what about your path to investing in the tiny, small microcap companies? Yeah.
So, as you develop as an investor, you kind of realize there are a lot of very smart people in our field, kind of playing this game. The very best investors by definition over time tend to get pretty wealthy. So you kind of have to think about when you're like a young developing investor, you got to think about kind of what you can do to compete with them. My answer is pretty much just avoid them. Don't compete with them. And that steers you towards the kind of ponds in the market that are, too illiquid for them to access, microcaps, nanocaps. And kind of the good news behind that is, globally, like 75% or so of the listed securities are really small cap and below. So that's a really strong pond to fish in. You're really not limiting yourself by doing that.
And can you tell us a little bit more about, some of the ponds that you have been fishing in internationally, and what are some kind of things, say roadblocks that you've found yourself running into when you're looking across the pond?
So, we have investments everywhere from Poland, Kazakhstan, Niger, Egypt, Peru. Some of these things are listed in Canada, so they're easy to access. Some of them are in fact listed in those markets. Egypt, to give an example. So, as a small investor, you can't just open an Interactive Brokers account and trade those. You have to get there are passenger markets. You got to kind of trade them under your own name over there. So that creates just even getting to the second where you can even start to trade these things requires a bit of paperwork and going through some red tape and such. And that's attractive to me because anything that is going to turn people away from the market, that's just less fishermen to compete with. So I kind of like it. Not that I like paperwork, but if it leads me to a underfished pond, I do. So aside from that, I mean, you really just got to be realistic about how much you understand the market or not. I don't mind, look, I'm not going into some of these markets thinking I'm going to become an expert on them. There's if you grew up and know the local language, that's a big difference. But there are certain markets that I just know for a fact that I'm just completely not competitive advantage in. I've always had China in that category. India, I want to invest in someday, but I know there's going to be a big learning curve getting up there. A lot of smart investors there. So I mean, the biggest key is, I think, developing relationships with some other local like-minded investors. As you bring them ideas, they can often kill a lot of them right off the bat. Kind of, call it the gringo test. Figure out where you're off. Egypt, of course, is an easier one for me because I spent a lot of time there. I got a lot of friends, big network there. Poland, we have an analyst in, so that's very helpful. But it's just about being realistic about what it's going to take to get up to speed in certain markets, avoiding the ones you don't think you're going to be able to get up to speed in, and really, just kind of being wary of where the edge of your circle of competence is. So.
Right. Very nice. And what about your investing style bucket? Would you say you would find yourself listening, being right now?
So I'm definitely a value investor at heart. We seek to, kind of acquire participations, quality assets well below fair value, and ideally hold them for long-term holding periods. That's what interests me. Intellectually, and that's kind of the advantage of being just kind of a long-term patient thinker. I think is one of the few sustainable advantages you can have. That's not something the average person is wanting, able, willing, whatever it is to do. So generally speaking, our investments. We really try to focus on things that kind of have the right combination of management skill and alignment, and also financial independence. That mostly means just not too levered, profitable, not overly dependent on single customer or creditor. We do try to, I'm a value investor, but it doesn't mean I don't care about quality. In fact, I think there's plenty of stuff in the world that trades for cheap, but, I don't want to own a lot of things. And so why would I sell it for crappy stuff? And so we do look to invest in quality. You could call us GARP on some of these investments. Quantitatively, that means kind of opportunity to reinvest earnings, high rates of capital. But, of course, measuring quality is, unsurprisingly, it's a pretty qualitative exercise. So really just looking to own something special, something that's kind of scarce, not settle for, any old asset because it's cheap.
And would you say you're more concentrated than you are fully diversified in tons of different companies? Because it sounded like you said you don't like having lots and lots of different companies to keep track of.
The magic number for me is kind of in that 10 to 20 holdings, kind of in that 10 to 20 holdings range. It's enough that, I don't feel like, you could be overconfident letting taking huge positions and stuff. Like, no matter how good the bull thesis is, no matter how much you think you've thought something through, there's always it might be cheap for a reason. There might be someone else who's just smarter than you, who's depressed that price down, and you think you found an opportunity you didn't. So I'm not one of those guys who's going 5-6 holdings. Just not confident enough in my own intelligence, skill, all that. kind of, I'd say 10 to 20, probably closer to the 15 to 20 range is kind of precisely the range where I don't think I'm taking unnecessarily large risk on any one position. But I also don't feel like I'm settling for second best ideas. As you drift up towards that 20, a little bit above, I think you're kind of maybe starting to settle. And, look, in the end of the day, I'm paid to be an active manager. And, I think part of the reason everyone's run a Vanguard over the years is because they were paying people active management fees who were structuring portfolios like passive managers, like they had 100 holdings. Guess what? You're diversified. Right. Might as well just, go to Vanguard, own everything and cut the fees to nothing. Right. So, it's why you see these guys underperform by basically their fee over long-term holding periods. So that's really been the sweet spot for me. Sleep easy at night, still have some real active risk on, not settle for crappy ideas.
And would you say that your styles changed or adapted to, the market over a long period of time that you've been investing?
Yeah. So it's done. I think it's done two things, and sometimes it's hard to peel them apart. One, you just grow yourself as an investor. I started as what I would call like a superficial value investor, meaning, I was looking at, I'd buy Chevron because it was at, 8 times PE, and it was, that's meaningless without the greater context of what you're analyzing. It was kind of naive value investor. This is probably my first, half year investing. And eventually you develop that appreciation for quality. I would say that's where I've really evolved with the market. I was interested in kind of what we'd classify as more compounders, but they got popular in the market, and people bid them up to levels where you basically, had to be nailing predictions that were 10 years out, which I think is kind of silly, especially in this modern age we live in where things change really quickly. Technological disruption is a lot quicker now than it was 50 years ago. So as I, last 4 or 5 years, I've probably moved back towards deep value a bit. Is that growth as an investor, just where I see more of the opportunity? Probably more of the latter, but like I said, sometimes it's hard to peel those two things apart. I do believe that over the course of your career, you do have to adapt a couple times to the market circumstances. Every decade's going to bring kind of a new pond that's particularly ideal to fish in. And you have to, it might not be the one you've been accustomed to and that you've built your entire identity around. So you need to be able to kind of pivot and go to new places, but it's a slow process, when you might be talking 2, 3, 4 transitions over the course of your career on that front.
Mm-hmm. And what would you say are some of your strengths and say some of your weaknesses that you found yourself dealing with in investing?
So, time will tell regarding strengths. Things I perceive as strengths may, post-mortem might be weaknesses, and so you kind of, you really need the multi-decade record, I guess, to have. I'm probably jinxing myself if I start touting all the things I think are strengths. I'll say one thing that I think is, with my accounting background, I do think I have a good eye for quickly kind of digesting the reality behind the numbers rather than say the narrative that management's trying to promote. I think a lot of investors actually don't have that. And I kind of lucked across it because I started as an accountant in a public, working within a publicly traded entity. So I do meet a lot of really smart investors who've been investing their entire life. That was all they were interested in. And they were never on that side. And I think it's a blind spot for them, and maybe a blind spot they don't recognize, which makes it all the more dangerous. So that's probably one of the things I think. One of the things I think I would classify as kind of a strength. What makes me different, I'd say, and we kind of covered it, would be, I do go off the beaten path. Quality assets. We talk about being a value investor. You want to buy quality assets for well below fair value. That's not exactly something that's growing on, just growing on trees out there. It's actually very rare to find that. So the concept of value investing, right? It's simple, but it's not easy. And you really need to cast kind of a wide net to find those special opportunities. And so, we mentioned it before, that's kind of how I end up with investments scattered all across the globe. Poland, Kazakhstan, Egypt, countries like this. For better or worse, and maybe it's just a contrarian aspect, my personality. If I see too many smart investors kind of circling a given name or opportunity set, I tend to kind of get nervous and run off. so we'll see if that's a good thing or bad thing long term.
And do you kick the tires in the different countries, just looking at the companies that you do own or potential opportunities, or you're just working based on your network out there?
So obviously, once you build a network in a given country, it's even if you're not specifically digging into it at that given moment, you're now interacting with people over there, and they'll forward you ideas and put things on your radar. I'd say, I'm always keeping an eye out. Like once a year, there's always some market that you can see is trading kind of very cheaply. You can see they have a good number of listed names that appear to be pretty decent companies, high returns on capital, but they're trading at low multiples. And if I feel like there's a pathway I can find to kind of get myself familiar with that market, and it kind of fits within my kind of views of the overall kind of geopolitical risk, it's something you got to pay a lot of attention to these days. I'll try to kind of reach into that market. And sometimes I'm really successful doing that. And sometimes it starts as kind of an aspiration and doesn't go anywhere. I get distracted with other ideas. And so, but I usually do try to add, I'd say, my goal is really to add one market a year where I really feel like I've dug into it and build kind of a big group of people I can connect, interact with, and hopefully I find a good idea. So.
Sounds good. And what about Microcap Club? You've been a member for a while. Can you tell us your experience, what you think about the club, any kind of value that you've been able to get from it, and what you've added to the community as well?
I don't know how much value I've added. I try to, I just try to post an idea often enough that Ian doesn't kick me out, and because I would be devastated if I was. I'd have to reapply and everything. It'd be tough. This may come as a shock to people, but I find most people in the world, who I run across, say in ordinary social situations, they don't particularly have any interest in talking about microcaps. So I'm really just eternally grateful to Ian and Mike for creating a safe space for us nerds to get together and bounce ideas. That's really the biggest value of it. It's just truly that. It's just a community of really nice, smart people, and you can share ideas with and go to the conference once a year and have some drinks and talk microcaps in a bar. That's really kind of a rare environment. It's fun. So it's scarce, it's precious. I love it. If you're watching this video and you're thinking of subscribing, applying as a member, whatever, don't even hesitate. Just do it. It's an amazing community. Zero regrets.
Yeah, I definitely have to agree with everything that you said, Tom. I've been a member since like 2014, and it's all the people, having the space to talk about tiny companies and learn as much as you can. It's a rare, and especially with the individuals, it's a quality group of people, right? Wouldn't you agree?
Oh, 100%, 100%. I mean, I'll go a step further. I'll say, I had cancer 2 years ago, and I get an email like once every 3 or 4 weeks from me and be like, you okay? You okay? These are, this isn't a facade people are putting up. These are genuine, amazing people. And just very grateful to be a part of it. And one of my life goals is to not get, whatever the term Ian uses is, like trimmed out of it or, prune. There it is. Yeah. I have it's on my list of 10 goals is not to get pruned. So hopefully I'll keep it alive.
Well, sounds like health-wise you're doing pretty well right now, right?
Oh yeah, doing great. In remission for almost 2 years. So yeah, killing it.
Yeah, that's awesome. Anyway, Tom, I really appreciated you taking the time to chat with us today. Are there any other avenues that people can find you online other than in Microcap Club? We'll have a little, your handle for Microcap Club listed below, but Twitter, do you write anywhere else?
Yeah, so I have a website. You can shoot me a message there. It's pfhcap.com. That's P as in Paul, F as in Frank, H as in Henry, cap. I'm also on Twitter. I don't tweet much, but the DMs are open. And my handle there, it's PFH Capital. So P as in Paul, F as in Frank, H as in Henry, Capital. And I'm Tom44 on Microcap Club. So, reach out.
Thanks again, Tom. You have a good one.
All right, you as well, Sean.